Classification of entities and applicability of accounting standards. In our previous session, we have understood how the entities have been classified as announced by Institute of Chartered Accountants of India and as notified by the central government in consultation with National Advisory Committee on Accounting Standards. On 18th-19th of March 2021, Institute Council had come up with a new criteria in their 400th Council meeting. In that meeting, they have reclassified the various levels of entities which are applicable for non-company entities. It is, please note, whatever the Institute has prescribed, it is for non-corporate entities. But as per central government, what they have prescribed, what are applicable for companies. Okay. Now let us understand what are the levels of entities which are redefined as per Institute. Now earlier it was 3 levels, now they made it 4 levels. Level 1 large size entities, level 2 small medium size entities, level 3 small size entities, and level 4 micro entities. See, if you see level 2, 3 and 4, it is applicable to MSME, micro, small and medium sized companies or entities. See, this particular classification is for non-corporate entities, and in case of level 1 entities, all the applicable accounting standards apply to level 1 entities. In case of level 2, level 3, level 4 being MSMEs, they have given some relaxations or exemptions based upon the level of entity. Now coming to level 1 entity. Level 1 entity, it is in case their equity or debt listed or in the process of listing in any stock exchange or in India or within or outside India falls under level 1 entity. And in case of banking companies, it includes cooperative banks also, financial institutions or companies which are doing insurance business falls under level 1 entities. Here coming to third criteria, turnover. Turnover excluding other income. Please note, it is excluding other income. In previous accounting year, if the turnover exceeds 250 crore, then it will be treated as level 1 entity. Please note, it is 250 crore excluding other income and it is preceding accounting year. Suppose if you are evaluating for 2021-22, the income turnover to be seen for 2020-21 March. If excluding other income, if it is more than 250 crore, then you should consider it as level 1 entity. Similarly, borrowings, if it exceeds 50 crore in preceding accounting year, then you should consider it as level 1 entity. Holding or subsidiary entities of any of the above entities also will be considered as level 1 entities irrespective of their turnover or borrowings. Now coming to level 2 entities. In case of level 2 entities, the turnover criteria is between 50 crore to 250 crore. If the entities preceding accounting year turnover falling between 50 crore to 250 crore, above exceeds 50 crore and less than or equal to 250 crore, then it falls under level 2 entity. And in case of borrowings, it is 10 crore to 50 crore, it falls under level 2 entity, and any of the holding or subsidiary entities of the above entities. And coming to level 3 entities, here the turnover criteria is more than 10 crore and less than 50 crore, and borrowing criteria is 2 crore to 10 crores, and holding or subsidiary entity of the above 2 entities. In these cases, it falls under level 3 entity and it is small entity. And level 4 entities, if you see level 4 entities, which is not a level 1, level 2 or level 3 entities, are considered under level 4 entities. Now, they have also given some certain additional requirements. What are these additional requirements? I will discuss important points. Here, if an MSME which avails the exemption or relaxation of any of the accounting standards, then it has to specify in its notes to accounts what are the exemptions or relaxations with respect to which accounting standard has been availed. And suppose any entity which falls under level 2, level 3 or qualified for exemption or relaxation previously but no longer qualifies. That means in previous year it was in level 2, level 3 or level 4. Now this year it has changed their level, it has upgraded its level. Then in that cases you should understand that the whatever disclosure for that reporting period is there, it has to be reported as per that level of applicability of that level criteria, but you should need not change the previous year figures based upon current year's disclosure. See, usually what we do, current year, if the disclosure we are making any changes, we parallelly change the previous year numbers according to current year numbers, but here they have specifically mentioned that it need not be changed. Rather, you have to mention that this particular entity was previously under so and so level and it has availed so and so relaxations or exemptions. That note has to be mentioned and the figures need not be changed in comparison with the current year reporting. This point you have to keep it. And another point is, if suppose any level of any entity, it has downgraded its level. That means level 1 has become to level 2, level 3 or level 4. Next 2 consecutive years, unless next 2 consecutive years its level is not changed, that disclosure should not be changed. That means suppose in this current year, if the level is downgraded from level 1 to level 2 of any entities, it should follow same level 1 criteria only. Next 2 consecutive years, you should check whether the level has been downgraded, then only the criteria level has to be changed, otherwise it should not be changed, and this applies to level 2, level 3, level 4 entities also. And if some level of entity do not want to avail any exemptions, then they can mention that it falls so and so level of entity, but still they are not claiming any of the exemptions or relaxations, and all applicable accounting standards are followed, and accordingly the financial statements are disclosed. That it can be mentioned. Now coming to central government classification. As mentioned earlier, in case of central government classification, they have mentioned that they have categorized into 2: small, medium sized companies, non-small, medium sized companies. In case of what are small, medium sized companies? Earlier, old version also same clauses, only thing here the turnover. Here earlier the turnover was 50 crores, now they made it to 250 crores. And in case of borrowings, earlier it was 10 crores, now they made it to 50 crores. Otherwise, the other clauses remains same, there is no change. And in case of non-SMEs, it is which are not SMEs. Now here also they have prescribed some, here also they have made some instructions that to be followed. What are that is, the SME which does not disclose certain information pursuant to the exemptions or relaxations given to it should disclose by way of a note to financial statements that SMC and has complied with all the accounting standards. Suppose SMC, though it need not disclose, which opts to disclose, they have to mention that it is an SMC and they are following all the accounting standards. Similarly, here also the same criteria. If an SMC becomes non-SMC or non-SMC becomes a SMC, then the disclosures should not be changed based upon the previous year figures. It need not be changed. You have to maintain the same disclosure which are applicable to respective financial years, and a note has to be mentioned in the financial statements accordingly. These are some additional requirements which the Companies Act, central government has given for further clarity in the disclosures. Now, if you see this, the prescription, it is very clearly institute has given very clear disclosure criteria for each and every particular accounting standard. Which accounting standard, which level of entity it is applicable. So this particular criteria has to be applied to respective level of entities for disclosure purposes. This amended applicability is from April 2020. Definitely this question is expected in CA intermediate, because this is the first time applicable from May 2022 examinations. Thank you.